So yeah, just before we start this podcast, you might have seen that the UK is getting really strict on disclaimers related to crypto content on social media. So just before we begin, I need to reiterate that none of this content is financial advice, and the podcast is just two people discussing the crypto news, and none of it should be used as the basis for an investment. So the first thing I wanted to talk to you about, Joe, is the hype around a Bitcoin spot ETF. So there's been rumors and some potential mix-ups in the press that has caused people to become very excited, and Bitcoin has recently hit 35k. I just checked the price on DefiDive. We're now at 34k for price of a Bitcoin, largely driven by speculation around this potential upcoming ETF. And by the 14th of November, we will hear whether or not the ETF has been confirmed. What's your take on this? Do you think it's coming? Do you think it's over speculation? Any thoughts?
So first off, it's great to be chatting again. It's been a while since we did this, but yeah, when it comes to the Bitcoin ETF news, we've now been in the markets for best part of 10 years, if not longer, actually, between us. And since as far as we can remember, it must be at least 7 or 8 years ago, there was always news about a potential Bitcoin ETF. Okay, it makes total sense that if there's an asset that's really widely traded, it's got a market price, why not wrap an ETF around it? It makes it safe for people to buy. It makes it easier for people to buy. And it creates this air of professionality around how the asset's managed, right? Which is where we came from in the past. Bitcoin's always had this, rebellious kind of image around it of, it's an asset type that's different, it's alternative, it challenges the existing financial system in certain ways. And so an ETF is just a natural direction, in my opinion. Whether it's going to come now or later, in my opinion, I think it's absolutely not a question of if at this point. Whereas when it was 6 or 7 years ago, absolutely is a question of should it be done, shouldn't it be done, is the market liquid enough? Now all of those questions are kind of moot points. They've been discussed to death. Regulators are well aware of the risks. Consumers are well aware of the risks. And we're really excited. I'm really excited for the fact that we know at this stage, we're very confident at this stage, it's a question of when. And the fact that the prominent news that people are really excited about at the moment is the fact that it's not just being listed by anyone. Of any of the financial institutions in the world that could potentially file for an ETF listing, BlackRock is the largest, the most renowned asset manager in the world, and by quite a huge margin. I did see a stat a little bit a while ago that said because they're so ingrained in the financial system, they work very closely with financial regulators in all sorts of fields, that their rates of approval on ETF filings is far above the rest of the market at about 60 to 70 odd %, if I remember correctly. And what that tells me is, they have a high level of confidence that they wouldn't be filing this ETF approval with the SEC if they weren't confident that they were going to get it.
Yeah. It's I mean, BlackRock is the largest fund manager in the world, and I don't think they would even bother with this unless they thought they were going to be, successful. And I think there's going to be, from the SEC's perspective, I think there's more pressure than ever to approve it. Like, any decision to say no is going to be up against a very expensive legal team, up against a company with lots of resources. The first ETF application was submitted back in 2013 by the Winklevoss brothers, and I think it's pretty easy for the SEC to decline them, whereas potentially BlackRock might have a much more solid business case, a much more well-funded legal team who can actually try and appeal any decision.
Yeah, and it's happened a couple of times back and forth so far we've seen, right? So even when way back when Winklevoss brothers filed their ETF, I believe it was followed up by a couple of the Silicon Valley players as well. And uh, Bitcoin Trust, I think, is one of the names. But and one of the issues that SEC rose back then was the market's not liquid enough, meaning that a huge whale could enter the market, manipulate the price, and by then it's not a great ETF if you can short one ETF and then buy the asset on a market, and there becomes a huge disparity because then that'll provide too much of a shock in the market. We're in a different space now where we've seen the recent challenges have been around, okay, how do we know the assets are safe and secure? Well, good news is that there are a lot of well proven custodian businesses now that the SEC has been forced to kind of acknowledge, given that so many of their consumers, their citizens in the US, for example, are holding crypto assets. So that piece of the pie is all sorted out. There were questions, I believe, last year around, sure, can we make sure that the funds are traceable? And there's been a whole host of Bitcoin blockchain analytics companies that have proven that they're able to trace criminal activity up and down the blockchain. And that's tick that box. So I believe we're in a position now, we're in a turning point because the SEC, even if it wanted to create reasons to say no, is running out of options actually. And every tick box that could satisfy their potential remit to protect consumers, to protect the economy, every checkbox is being checked. And now the delays seem inconsequential, and I feel like the market really knows it. So we're seeing in the markets a lot of kind of bullish news coming out. We're seeing the markets just on a precipice of wanting to shoot up. And yeah, perhaps on that note, we should talk about that tweet of the other week, right? So I believe the news was a Cointelegraph intern who had access to the company's Twitter account saw a headline come in saying that the SEC has approved the Bitcoin ETF. And when he thought he'd be a smart intern and post that without checking the sources, the markets went absolutely haywire. Were you following that?
Yeah, yeah, I was. That's when the price jumped up to 30K, and then it retraced afterwards. And then I think since then, a clearinghouse listed the ticker symbol for the ETF as well. So then the price has gone right back up to 35K. So yeah, a lot of reaction is happening to various leaks and any info that is coming onto the market. One thing I wanted to get your opinion on is the SEC has already approved Bitcoin ETFs that are based on futures. And the way the futures ETF work is if I was to buy a piece of the Bitcoin ETF, the provider does not need to own any Bitcoin. So they can sell me Bitcoin without owning any Bitcoin. Whereas what BlackRock have submitted is a spot ETF, where if I buy BlackRock's ETF, they will also own a Bitcoin to match my purchase. And I think it's kind of crazy that we have the futures ETF approved and we don't have the spot ETF approved, because the futures ETF just seems way more risky. It seems like there's a lot that could go wrong there. Whereas a spot Bitcoin ETF, maybe there's problems with liquidity, but that seems like a very minor problem compared to having like fractional reserves or no reserves at all.
Yeah, I'd have to agree with you on that. The way that futures work, especially in the crypto space, is that the underlying asset isn't actually traded whatsoever. So in terms of like liquidity, I've always had a preference for spot trading, where when you place a buy order on a Bitcoin exchange, the Bitcoin actually transfers to your wallet on the exchange, and you can withdraw that Bitcoin. With futures, it's kind of a little different, right? It's a promissory note that essentially gives you the right. It's almost like an option. It gives you the right to the leveraged price change effect, and so by virtue of that, it is a lot riskier. One of the other reasons why I don't like it is because, especially in the early days, some of the crypto futures exchanges haven't been entirely transparent about their own dealings. And in a world where there's Mt. Gox blowups, FTX blowups, and you can see in the public news that people running these exchanges have been trading their own books. We have had admissions in the past before the regulations have come to play, that people who own futures exchanges have been trading their own books as well. And that, to me, the idea of that is absolutely disastrous. And so perhaps that's why that news in prior years hasn't been as significant as BlackRock's spot ETF, where for every one Bitcoin's worth of this ETF you buy, BlackRock will go out and buy that physical Bitcoin and store it in cold storage. That to me is where real security and real value lies. But the most exciting thing about ETFs, if we've not already covered this ground, is an ETF is essentially a product which gives you access to the price fluctuations, in this case of Bitcoin. And the reason why people are so bullish on this news is that it would represent the first time in the history of the world that regulated financial institutions can buy and hold Bitcoin within their portfolios. And I'm the most excited because when you look at the financial markets, the greatest amount of capital allocation goes on in the pensions industry. And as you see in all major countries, government pensions are usually the largest, and there's usually a remit in there to allocate at least sub 1% or 0.1% of their entire asset value in emerging technologies. And the moment Bitcoin ETF lists, then I know there's going to be a floodgate of money that just gets allocated towards buying a long position in a Bitcoin ETF. And that's what we should all be hugely excited about.
Yeah, it's a very exciting time. So we should hear before the 14th of November whether this is going ahead. And then after that, I'll be looking forward to the Bitcoin halving in March, April next year. So yeah, it's going to be an interesting 6 months. And then
Super excited to see what happens.
yeah, let's see what happens. Yeah, just gotta hodl and wait. But yeah, the next news story I wanted to talk to you about was CNBC have released a new documentary, and the documentary is about a guy called Jimmy Zhong, who is he was officially known as a Bitcoin investor. And as the documentary explains, he was a early contributor to Bitcoin and actually helped write some of the source code and worked with Satoshi Nakamoto and the group of people who were developing Bitcoin. And he was known amongst his friends as a successful investor living a glamorous lifestyle, and people kind of just assumed, he was a early investor in Bitcoin. He was involved way back in 2009, so it's easy to imagine how you would make a lot of money from that situation. And he had a burglary at his home in 2019, and he naturally reported this to the police. They didn't help out much, and then he went to a private investigator. And when they started to look into his case, they actually found that he stole 69,000 Bitcoin from Silk Road back in 2012. And they ended up catching him for this. He went to jail, and they seized his Bitcoin in 2021, and that was worth about $3.6 billion at the time. So yeah, it's a pretty interesting news story and documentary if people want to check it out. What do you think of this, Joe?
Yeah, it's a pretty crazy story, actually. There's so many different angles you could go. But I mean, I did browse some of the crypto forums about news of this, and people, they want to dislike him, but at the same time, they really don't. At the end of the day, he did contribute towards Bitcoin's existence in a way that very few of us can say we've ever had that kind of impact. To contribute to core Bitcoin code is, in my mind, a huge deal. So, although sure, I'm not going to absolve his criminal intent, but I'd say it's pretty unlucky, because one angle that people were talking about is, well, at the end of the day, the site that he stole it off of was an illegal website to begin with. Is there an angle in your mind that it could be seen as almost like a Robin Hood type figure? No, of course, like sure, he's spending money on misadventures elsewhere, but I mean, but especially back in 2012, we kind of were around the markets at that time, and we were kind of getting really sick of the fact that people only really looked upon us, being in Bitcoin, being in crypto, as dodgy people, right? But if he took money off the dodgiest of all, the Silk Road, the guys who ran Silk Road, then, and these were the guys that the US government were desperately after, right? They ended up prosecuting the dreaded pirate Rogers, right, Ross Ulbricht, a couple of years later. But it's a pretty interesting turn of events how ultimately he was reporting one crime, which was a crime against him, right? A straightforward theft, and then was it the private investigator who turned him in the end? I wasn't aware of where the story led to at that point, but it's yeah, it's pretty unfortunate to be in his position.
Yeah, it's a strange story because the guy is also he's very smart but also a bit dumb at the same time, because the private investigator linked the guy's account on an exchange where he had his full details with the wallet. So at some point he sent about $800 worth of Bitcoin from his hacked wallet, and he sent that to an exchange with all his details. So then they could just say, well, we've got proof that this wallet of stolen Silk Road Bitcoin belongs to you because you sent it to an account on this exchange, which is really, really dumb. Like, for someone who is coding the Bitcoin source code is like, shouldn't be making that kind of mistake, to be honest. So that's a bit unusual. And I think I agree with your sentiment that it's not the worst crime in the world. It's worth pointing out that when he stole the money, those Bitcoins would have been worth about $690,000. So that's still a lot of money, and it's not good to steal, obviously. But it's not like he originally stole 3.6 billion, which I'm guessing is worse than stealing 690K. And
But this is like a criminal underworld story, right? You hear
yeah,
stories
yeah,
of
yeah,
Italian gangs back in the day operating out of a dark alleyway in Chicago, right? But it's essentially like, well, not a criminal at the time, but he became criminal stealing off an even worse criminal, surely, right? Would you not consider running a drug marketplace a worse criminal? Not that I'm trying to fight in right or wrong or take sides or anything, but and again, it's unfortunate how, sure, if Bitcoin didn't have the meteoric rise that it has had in the last 10 years, I don't think anyone would particularly care, right? Sure, it's not a small amount, but it's not, it's not substantially enough to allocate significant police time to, when there's crimes happening right in front of our eyes, right? But it's that turn of events where you hired a personal investigator. This personal investigator found out more than he thought she would, and ultimately it led to his demise, right? But the amount that he was sending to the exchange wasn't a huge amount, but it was enough to link his identity, right? So at that point, you got to say to yourself, look, the gig's up. Bitcoin's now, at a huge price. It's not a small amount of Bitcoin. And yeah, I guess it could have been, I'm not sure if he could have gone through any sort of recourse to absolve himself. But at that point, I guess the difficult thing for him is he could never ever declare his source of income because it was ultimately from criminal intent, even though it was from another crime. I guess the way the justice system looks at it is, you just can't do that, right?
I wonder if he has other Bitcoin stashed away, because they confiscated the stolen Bitcoin, and he also had Bitcoin stolen from him, which suggests, he has multiple wallets. And yeah, I would kind of feel bad for him if he's been involved in Bitcoin since 2009 and he no longer has any Bitcoin left, because he's also been a victim himself, right? He had a decent amount of Bitcoin stolen from him. So yeah, the crypto sympathizer in me hopes he does have another wallet somewhere with clean Bitcoin.
Yeah, you'd like to think, or maybe worst case scenario is that he had some legitimately earned Bitcoin because he contributed towards a core code. Back then, price of Bitcoin 2009 was less than $1 a piece, right? Maybe I had a stash of a couple of thousand Bitcoins. And maybe the prosecutors have taken that off him as well, which would be the ultimate and unfortunate story. But imagine if after he's released, he gets known as the guy who could have been worth such and such, right? Oh, that would be a heavy weight to live under.
Yeah, yeah, it could be a very painful experience for him.
But I guess the moral of the story is don't steal crypto, and pay your taxes, etc.
So the next story I want to talk to you about is Reddit killing off their crypto community points token system. So Reddit introduced a token system in 2020 where you could earn points for participating in particular Reddit subreddits, and you could redeem those points against a cryptocurrency, and you can use these points and tokens to buy things like unique badges and animated emojis. And Reddit have decided that they don't want to carry on with this program anymore. So the price of their tokens, called Brick, Moon, and Donut, have fallen by 50%, 84%, and 28%, respectively. And Reddit has said that the resourcing required to manage these programs was too high, and the regulations are tightening in the US as well, which probably makes these programs more effort to run than what they're worth. What do you think? Have you been holding any Brick, Moon, and Donut and been affected by this fallout?
No, I can't say I have. My policy when it comes to these kinds of tokens is, where it doesn't pass the litmus test of, look, why do a token when a database entry will do, then, I'm not going to buy it. For me, if I look at projects like Reddit, although it's a widely popular website, I love to browse Reddit as well. It's like, it's almost like they've put a decentralized application when they've not realized themselves they're a centralized service. And maybe they had aspirations to go decentralized, but why do a token system that's so decentralized, so global, when your website is essentially on localized servers? From my perspective, it would never make sense to invest in a token to speculate on the value of people's contributions in terms of their messages and points or whatnot. It seems like the link is a bit tenuous. If I was quite bullish on Reddit themselves and they were, tokenizing their shares, that would be a bit of a different story. I'd love to consider investing in a project like that. But where the value of the token is tied or linked to a user activity, it doesn't seem to me like they've thought about the game theory through enough. And it's kind of the same fallacy they have with blockchain games, right? The appeal of that token is only so far within that centralized service. So why you would want to open it up to a wider financial market is, I'm not sure. But it appears, unfortunately so, that the insiders and Reddit themselves have maybe done the ultimate of rug pulls. One of the reasons I actually suspect that wasn't really covered in detail in this article actually is if they're incorporated in America, I figure they are. because they run out of the valley. Um, I secretly think that their real dialogue is they're petrified of the SEC knocking on their doors and saying you've been selling unlicensed securities, in which case the fines will be absolutely monumental. And when the use case hasn't really gained a lot of traction, you know, I think it's just not justified, you know, ultimately in a business decision, although their idea, their inception, their implementation may have been good. I think maybe they didn't think through some of the most basic fundamentals of, you know, why should we create a financial incentive for essentially just rewarding a certain behavior? I'm not sure that works on Reddit. Reddit points the karma system works great because it's just like a very effortless but free version of affirming someone else's view to show your support for them. But once you start adding financial metrics into there for badges, you know, you start trying to post for badges, you start trying to post for a bit more than just upvotes. I feel like it breaks the community-led system that Reddit's so famous for. Do you think they had their incentives aligned from the first place? You know, what do you think about tokenizing Reddit in a way where the rewards become financial?
Yeah, similar to you, I'm very skeptical of anything that is fundamentally a Web 2.0 service that tries to incorporate Web 3.0 elements because it's the latest trending thing and it doesn't really work. So a clear-cut example of this is gaming, where people speculate you might be able to take your gun from one game to another game if that gun is a NFT and you truly own it and it can be plugged into multiple games and no company can ever change it or take it away from you. But then the problem of that is game developers don't want to incorporate other people's ideas into their own game and they actually want to control the experience. And ultimately, the game is a Web 2.0 platform and they can decide to disable any Web 3.0 plugins. So this is what's happened on Reddit, where it's a Web 2.0 website and they've added a token system and they can't take the tokens back from users, but they can decide to cut off support to those tokens. And without that support, those tokens are worthless. So you can't easily transition from having like a Web 2.0 service to a Web 3.0 service. And I see it as an all or nothing decision. If you're a Web 2.0 company, you should probably just focus on being Web 2.0. And as Reddit have found out, there's not a lot of benefit trying to implement quick wins that introduce a lot of headaches. And then instead, if you want to be Web 3.0, you kind of need to be all in on Web 3.0. So the way Reddit would work as a Web 3.0 platform is you would probably replace the karma system with tokens, and you would earn tokens for participating. And those tokens would represent ownership of the Web 3.0 Reddit. And those tokens would have voting rights. So you could change features on Reddit. That's kind of like how it would work. And if you're a Web 2.0 company where you've got existing shareholders, they're never going to agree to any of this because they're just giving away money and giving away their influence over the company. So yeah, it doesn't really work. I think it could work, but it relies entirely of the goodwill of the Web 2.0 company to like keep Web 3.0 features alive. Mm-hmm. But even that in itself is going against one of the fundamental principles of crypto, which is to be trustless. Like part of the point of crypto is that I don't need to trust anyone. And I don't mean that in like a cynical way, but it's good if I can have a smart contract or an exchange of money with someone where I don't need to trust them to deliver on the money because it's hard coded, or I don't need to trust Satoshi Nakamoto that he won't print more Bitcoin because it's hard coded. There's 21 million. So in short, I think it's kind of like it's a flawed concept, unfortunately.
Yeah. You know what it reminds me of? You remember a couple of years back when we were in the markets and everybody was talking about, let's do a blockchain solution. We believe in blockchain, but not Bitcoin. That was an interesting time where everybody was essentially looking for, and we had a phrase for it, right? Where everyone thought they had a solution and they were looking for problems in which the solution fit. And it feels like that's what happened in Reddit's case, right? They saw this glamorous technology. Perhaps their developers were really passionate about it. Perhaps they were crypto holders in themselves and they thought to themselves, look, why don't we just put a blockchain solution in place of where essentially just their database would have done right? And ultimately, the core mechanics of it is some sort of reward-based system that they could make payouts for, perhaps to incentivize some nice behaviors. But a database could have tracked that and a lot more easily, a lot more powerfully, a lot more hassle-free. And that's essentially just what the Karma system is and does and has done for years, actually. So it looks like it's, in this case, it's a solution that was looking for a problem that maybe never existed, or a couple of board devs looking for something to do in a crypto space. But, hats off to them. They tried it. And to pull the plug on a project, is never easy. But for them to face the music and say, look, this isn't working out. We don't need crypto rails on a community-based Reddit platform. So be it. But I feel like this is also signals a bit of a trend in the Silicon Valley space where every single social media startup or app that has risen to prominence in the recent 10 or 20 years, whether it be Facebook, whether it be Google, or now Twitter, has tried to do something in the payment space. So one perspective that I can bring, because I moved out to Asia a couple of years ago, was payment super apps are absolutely synonymous in this region. Every single country you go to has one app that does everything, whereas in the Western markets, in the US, UK, Europe, that doesn't yet exist. And people are betting their money that one of these companies, Facebook, perhaps someone like Reddit, perhaps it'll be Twitter, perhaps it'll be Google with Google Pay back then, would come up with some sort of payment super app that would essentially replace banks, not in the same way that digital currencies have, but would replace the need for kind of your retail bank network. So I'm not sure if that was in Reddit's playbook, but it does bode well in this Silicon Valley playbook to have that large, connected network of user base. Perhaps in Reddit's case, it wouldn't work as well as someone like Facebook or Twitter because the real life identities are quite separate.
I've got
But yeah,
I've
worth
got no
considering.
doubt that the other factor might be the free up engineering resource to jump on the next bandwagon, which is AI, because they got in like during the hype cycle, they've got off, and now like maybe the hype behind AI could be real and long lasting, but a lot of tech companies are jumping on AI as well, so maybe they have this spare engineering team that they can put on AI now, which is probably being discussed heavily in their boardroom.
I look forward to the day where there's automatically generated troll post responses ready and waiting for me as I post my next Reddit post.
Yeah, well, what you don't know is the troll responses have probably been bots and AI for like a good 4 or 5 years now, maybe. But
Yeah, that's always been a problem on websites like that, right? So yeah, maybe in some ways, I think Twitter explored this theme as well. If they have some sort of a system where it costed money to upvote, to recommend, to post, then that's potentially one way around the bot system. Again, not sure if of Reddit's underlying motives for turning off this system, but perhaps it's related to that. But yeah, Reddit is a really challenging website from what I can gather to administrate, because they try to operate in a way where community managers run their website. So it's like Reddit as a company does own and run their services, but it doesn't manage their services, which creates headaches in other aspects of their operations, like free speech, etc. But yeah, it probably draws them away from, having a crypto project on the side probably draws valuable resources away from areas that actually matter for the site's, profitability and growth.
Yep. No doubt about that. So the last area I wanted to talk to you about is DefiDive. Are you able to share what we've been working on and what's coming up next?
I'm really excited to say that in the early part of this year, what we did was we introduced the new site, which does use elements of AI, ChatGPT, to read through and contextualize each article, and it puts together a handy filter. So what I've been doing in the last couple of weeks, for example, is filtering against Bitcoin news, because I'm pretty keen on seeing when these ETF announcements break, and it gives me a really easy way of getting an oversight for the assets that I care about in that moment, a really accurate picture of what's going on. It's almost like I've got my finger on the pulse, is the saying. What's coming up is that now that component is out of the way, we're going to iterate that and make it better and better over time. Our end goal is to make our daily workflows a little bit easier, save people a lot more time in getting the information that they want. And what we've been doing in the time that I've been saving recently is focusing on our dashboard section. So our dashboard section is our ultimate game plan. Our ultimate game plan is to give people an area where they can truly manage all of their crypto assets in a really simple, easy to use view. That's very, very powerful, but very, very professional. So our elevator pitch of the Bloomberg terminal for crypto is one we're sticking by. And one that we feel like we're making really great strides into. I've seen the tech behind what we're doing, the way it indexes different wallets and spits out the results in a way which is really similar to what you'd see in a professional investment banking environment. Professional dashboard, clean, clear, and concise reporting in a way that there's not adverts anywhere, and you can get the information, the exact bit of information you want, you can get easily.
Yeah, I really look forward to the dashboard release. It's going to be really cool to track my portfolio in DefiDive. And I still like DefiDive for the simplest of tasks, which is checking the price of Bitcoin and the rest of the market. I use DefiDive to quickly check the market. The website loads super fast, and when you go to the homepage, you can see the entire market, the prices, the 24-hour change, everything's listed out. Loads very fast. There's no clutter, no distractions, no pop-ups, nothing. So yeah, I kind of check DefiDive maybe 10 times a day, where I can just, in seconds get the updates I need. So yeah, I'm a user myself, and hopefully we can continue to launch more features.
Yeah, I think is it worth talking about, from a design perspective, what our pain points were as a team or as individuals? Because that, really informs why we decided to work on DefiDive, right? We all had similar workflows in the morning where we would wake up, we'd want to check the crypto news, we'd want to check for price movements, but realize that it would require a lot of different tabs open. Whereas we knew that the information that people are after is actually very simple and fairly lightweight. But if we design it in a terminal window that's really quick to load, really easy to access, and really intuitive, then I think the time saved, the valuable time saved, is a real huge benefit.
Yeah, agree completely. So that pretty much covers everything we were going to talk about today. So just before we wrap up, again, I need to iterate that none of this is financial advice. We're just two people discussing crypto news, and please do your own research before making any financial decisions. But thank you all for listening, and thank you for joining us on the call today, Joe.
Thanks very much, Josh, and look forward to our next chat.
Yep. Speak again soon.